What's up, guys? Welcome back to another trading video. This week we're going to be talking about some of the charts that you see over here on the left hand side. We do this every week on Sunday. I basically share my ideas and my technical analysis for the week ahead, and sometimes I throw a little bit of my fundamental analysis in there as well. So if you have not already and you like these sort of videos, please subscribe down below, like the video so that I'll keep doing them, and let's get into it. Okay, so we're going to be using the A1 Trading dashboard over here on the left hand side to kind of guide this this analysis. But for the first thing I want to say is that we're going to start with EURUSD, and we can see a couple things here. Well, we can see that the euro dollar still in an overall bullish trend on the daily chart. We're currently looking at the daily chart, but we've got this pullback here on the 4 hour and the 1 hour, which we can also see listed here. We do have kind of a shorter term counter trend going on here to the downside. That's something I'm going to be watching this week. And what I mean by watching that is, okay, the daily trend is still bullish, but then we've got these shorter term counter trends going on. Is that going to turn into a longer term downtrend? Or is the trend on the long term set to continue? And people get sometimes confused with this, so I'm going to talk about it from my perspective. Now, the first thing I should say is that I don't know. I don't know exactly what's going to happen, and I think that that's maybe one of the most important things to accept as a trader is we don't know with any certainty what's going to happen in markets. All we can do is make probability-based decisions, risk small, and try and capture as much of a trend or as much of the market that we can without dominating or without destroying our account in the process. So how do we do that? Well, there's a couple levels here that I'm going to be watching going into this week. Of course, we've got some longer term levels on the daily chart, such as this. If price pops down to that, might be an interesting point for trying to go for a long-term continuation. But I think that there are some shorter term levels to even think about here. So if we zoom in here, we're looking at the daily chart, and this level has my eye going into this week. Now you might say, well, what's the significance of this level? Well, couple key spots. Notice how price has multiple times held this area pretty decisively. That is a pretty good sign to me that, okay, buyers seem to want to hold this area for the time being in favor of that overall uptrend. So that's the daily view. Let's go down to the 4 hour really quick, and we'll take a look and see if we can see that a little better. And there you go. You can see probably even more clearly that there's multiple points here where the price is actually held. Let's see, is there anything on the scanner that shows us? If we go over to the scanner tab and we go to bullish pivots, you can see we've got a couple bullish pivots in this area. And if you're not familiar with the tool, if you haven't seen me talk about it, this is a tool that I built myself, well, with the help of a lot of people. But what it does is it scans for all sorts of different technical setups or patterns. And one of the things that it looks for is these bullish and bearish pivots. And all this is signifying is basically sharp V-shaped movements on the chart. So when we see that, the tool can sometimes point out levels, or when you see clusters of areas, it's generally, for me, considered an area of support or an area to at least consider. Anyways, that's just for that. You can see, again, from just what we see here, it's pretty clear that this area of support is pretty significant. So for me, I think that this area is probably worth looking at buys going into this week. Again, not telling you what you should do with your account. This is just my own analysis and my own opinions. But I think the idea of it depends what kind of time frame trader you are for your own sort of trade setup. But for me, if I was to swing trade this, like if I was looking for a bigger move, I do like the idea of looking at a buy at this low if we get back to it, right? If we go to retest that, some sort of buy here, with a stop underneath that kind of area that we just talked about, that previous resistance, some sort of stop under here. But you have to realize that this is a pretty big stop. So for people who are not swing traders, this might not be realistic. That's 180 pips, right? So sometimes people are not going to want to, do that. So that's why I brought up the lower time frames. You could jump down here and say, okay, well, maybe we can tighten that stop and look at something like this, right? Maybe if price comes down to this point again, we look to get long here and we say, okay, I'm going to give this area a chance with a stop underneath, maybe somewhere around the previous low. So something like this, right? And these are just me picking out spots pretty quickly, but just as an example. So that's risking 60 pips, which is probably more reasonable for swing traders, but probably still not good for day traders. But this is kind of more focused on swing trading when we do these weekly outlooks because, again, I want it to be a little bit more relevant because the market could gap down, it could gap up, we could see movement. And so analyzing the daily or the short time frames might not necessarily be as beneficial as soon as the market opens, if that makes sense. Okay, so let's look at another one. We can just switch over to the next chart here, which is going to be GBPUSD. This guy is still in an uptrend here. We can actually see that on the trends tab as well. Look at that, pretty much, let's see. Make sure that's up to date. Lots of strong buying across the board here on GBPUSD, which is a very, very bullish environment. And so for me, until this changes, any sort of pullback to me is just more centralized on buying, right? So anytime we pull back in a super strong uptrend like this, I'm very happy to try and look for opportunities to get long and to, some sort of significant pullback. It's a little bit tricky because this market is in a weird uptrend. It's in like a chugging uptrend, but it's choppy. So it kind of makes it hard to pick sort of support and resistance levels. But for me, this area seems pretty solid. We've got this low that multiple times has held pretty significantly. So any tag of that, if we were to drop down there, to me, I'm just more biased towards looking for buys on this chart. We've got other levels as well, things like this area here. Pretty sharp price reaction when we came down to that point as well. Here, so on and so forth. However, if we started to see a break of that sort of pattern, there's also probably a trade to look at. So for example, let me give an example. So let's say I bought here, right? If I buy here, and let's say I got stopped out here. Let's say I put a stop there. If this were to happen to me, what I would probably do is I'd probably flip sides. So at this point, if this were to happen, I get long, it doesn't work out, I stop out, and we see continued signs of bearishness, I would probably flip the script and do something like this. I'd probably be looking to sell with a stop to buy back up here, right? So that's kind of a scenario where I could see myself not being loyal, quote unquote, to the trade, but more loyal to what the price action is saying and trying to go for that. But however, that kind of ignores the fundamental side of things, which for me, fundamentally bullish on GU right now because of my bearishness on US dollar. So generally filtering out my trades based on fundamentals is another thing that I do. So, right now they're printing a lot of US dollars. The Fed is doing everything it can to continue to push for, a bounce back from this whole pandemic situation. So my bias overall on US dollar is bearish. So I'm not going to be taking a lot of long situated positions on US dollar pairs. Okay, so let's move on to the next one. Just generally bullish on GU. Let's see what else. If we go to UJ actually got a move last week, which was pretty significant. UJ has been such a choppy downtrend, but look at this price action recently. We've seen some pretty good bullishness. What does the trend say on there? So if we go here, so selling on the daily chart, buying on every other chart here, the 4 hour, the 1 hour, and the 15 minute. So let's look at it from a daily perspective. You can kind of see that the overall trend definitely is still down here, right? We're still pretty decisively to the downside. However, we broke out of a pretty key section here. I mean, that was like, I was watching that chart saying, okay, price is probably going to hold and stay bearish at this level. So this is one of those scenarios where maybe flipping the script could be worth looking at. The reason that I say that is, okay, well, you just said you're bearish on US dollar. Well, when we're talking about the US dollar as a safe haven, the Japanese yen is also a safe haven. And these things get sold during recovery. So in this case, I might actually prefer the US dollar over the Japanese yen. Whenever we're talking currency pairs, we have to think about one versus the other. And so in a recovery situation, which one is going to be more preferable? That can flip, that can change. Anyways, from a technical perspective, we did get a pretty clean breakout last week on UJ. And so watching this one going forward, looks like it very much wants to try and retest that 200-day moving average. As we've talked about on the channel many of times, the 200-day moving average is kind of like that longer term, very slow trend direction. They talk about it every time on the news that the S&P 500 touches or crosses or goes underneath or above the 200-day moving average. It's like the first thing they talk about, because it's like that long-term indicator or that long-term directional filter that so many people watch. So anyways, not a huge opinion there on UJ. Mixed fundamentals, and then technicals, still in a downtrend, but we are breaking out. If this really gets legs to run, maybe we could look to try and jump into the trade on the long term. But we will see if this thing continues or if it fails and rolls back over and continues with the trend. Let's see what else we've got. USD Swiss, probably the same sort of deal. This one not bouncing back as much. You can see, whoops, I did not mean to draw a channel. I want to draw just a line. You can see in this case, still kind of underneath that structure. We do have this downtrend on the daily chart that is pretty strong, but on the 4-hour, we've got a pretty good little uptrend or counter trend going on. We can see higher lows forming on this chart, right? And so this one will be interesting to watch too, because I think that there's a couple trades here as well. One of my favorites being, okay, if price continues up here, but then breaks underneath this trend line, if we see some sort of break of the counter trend, right? Because this right here is the counter trend, and this right here is the long-term trend, right? So understanding that, okay, this movement right here, this is counter trend for now, is a pretty big deal. Now, how does this become the dominant trend? Well, if it starts to really change the direction of the market on the higher time frames and on those higher time frame moving averages as a simple filter, that's where the trend may switch, and that can happen. So for me, generally, I'm favoring the dominant trend until proven otherwise, until the dominant trend changes, which it does, but not as frequently. So let's see what else we can get ourselves into. Again, I like the idea of a break through that counter trend, that trend line there that we drew, breaking to the downside. Probably some interesting stuff could be going on with that. AUD/USD last week actually pulled back for the first time in a while. If you notice, there hasn't really been a big pullback since this area here back in August and September. This is the first time we're seeing a little bit of a pullback here. And you can see that we're into this pullback zone, which is probably an interesting area to watch out for potential buys. I have a bullish filter on this one as well, based on, again, same concept as GU, not favoring the dollar, but favoring counter currencies and more risk on environments such as the Australian dollar and the pound. So I think that this area is probably a pretty decent buy. So let's say the price came down into this area one more time. It pops down in there. Something like buying here, right, in this pullback zone. And what you'll notice if you watch my channel long enough is I'm not incredibly picky with my entries. I'm looking for a zone of support. I'm looking for a pretty decent risk to reward, and I'm looking for the fundamentals to line up, and then I'm looking to trail my stops. So that's pretty much all I do. I don't put it in a secret, fancy, expensive course or anything like that. That is basically how I trade, is just look for trends, try and buy into pullbacks or breakouts, and then try to just ride it for as much as possible. So for example, we've got this previous resistance, we've got this support. So this kind of congestion zone, that's where I'd be looking to buy. Maybe during the week, I'll look on the lower time frames to find some sort of additional confirmation, maybe some sort of sign of bullishness or some sort of thing that comes out in the news that gives me a catalyst, and then I will try and jump in on the long side. So let's say, for example, we just buy the previous swing low here, and we buy here. For me, that would probably look like a stop underneath that low, right? And from there, if price does continue in my favor, I'd be very happy to trail that stop loss up. And if price comes down and tags me out, then no problem. I'll look for another entry and I won't freak out about it. That's the other thing, is a lot of times people can't handle their stop loss getting hit, so they just do the exact opposite of trailing it in. When it starts going against them, they start moving it down until it becomes a giant loss, right? So that's a big no-no that we're going to try and not do ever, because it's a really dangerous practice. And sometimes it does work. That's the worst thing, is sometimes moving your stop away from the price can keep you in the trade until it reverses, but you're building a habit that long-term can totally destroy you. So for me, it's the exact opposite. Stop loss doesn't move until price is in my favor. If it never goes into my favor, I get stopped out and I'm out of the trade for a small loss. That's the other thing, is I'm not risking, this stop loss is not 10% of my account. That would be really poor risk management, and it would only take a couple trades to destroy my account if I had a couple bad stop losses hit. And bad stop losses are going to happen. Sometimes you're going to get whipped out of the markets, all that sort of stuff. So that's not what we're doing. We're risking something more like 0.5 to 2%, depending on how aggressive, the trade is, right? And that's something that's up to you, your own decision making. But the more you risk, the more you stand to experience worse drawdowns. And the less you risk, of course, the less your rewards will be. So that's something that you have to decide with yourself. Anyways, let's see what else we can get ourselves into. I'm not going to do New Zealand dollar, basically the same sort of concept. Let's talk about gold. Okay, we'll take a look at gold today. Gold is just teetering on this 200-day moving average. We're on the daily chart. There's the famous 200, and you can see we held it last time. We have been holding this area generally, and I think that honestly, this is probably, in my opinion, a decent area to take some small amount of risk on the long side. And here's what I mean by that. Long-term trend still up. We can see on the trend here, let's use yellow. Strong buy on the daily, sells on the 4-hour and the 1 hour, and we got a little bit of a bounce on the 15-minute. Okay, so when we're looking at gold, the overall picture here is bullish, but we've got this pretty impressive counter trend, to the downside in the last few months. So this is longer term analysis here, but the idea being that, okay, if that long-term counter trend or if that long-term trend is going to hold to the upside, I think that you get some pretty decent risk to reward looking to go long in this area personally, because yes, this counter trend exists, but the question is the counter trend going to take over and we're going to trend to the downside? I don't know. I'm not a crystal ball owner. What I'm saying is that I think it's probably a good chance that the overall long-term trend continues to the upside. And if that happens, it could be a nice, a return back to the highs. If this happens, we would make really good returns, especially if, you're trailing stops and letting trades become giant winners, as I always talk about on the channel. So let's say I did buy. The cool thing here is that the worst thing that could happen, I guess there's always more worse things that could happen in markets. But let's say that I took a risk of this distance here, right? So if price pops back down and looks like it's going to break through this 200-day decisively, I'll just stop out. So always thinking about our risk first. And let's say that that's a 1% risk, right? That's the worst case scenario. What's the best case? The best case scenario would be that price rallies sharply in our favor back to the highs, which is also possible with everything that's been going on in markets. I wouldn't even say it's unreasonable to think that it could happen. Lately we've had such crazy volatility in markets. We've had some insane stuff happening over in the stock market, things like Dogecoin, things like GameStop, which I made a video about yesterday, right? So you got all these different crazy stuff going on. So it's very possible that the gold market could make another decisive move like it did back here. And if that were to happen, your relative risk to reward would be fantastic. So again, we don't know that that's going to happen, but if it does, we would stand to make pretty decent gains. And I think that, again, one thing you'll probably notice if you watch my channel long enough is I'm not a predictor. I'm not gold is going back to 1900 by tomorrow or anything like that. That's not how I trade. I trade reactionary. I trade trends. I don't make incredible predictions about what markets will do. I make I take a position based on what the markets seem to be wanting to do, and then if I'm right, I let it run. If I'm wrong, I'm out. And that's basically my quote unquote secret method to how I like to trade. So if this were to move in our favor, The cool thing here would be that this stop just follows along. And if it does become a giant winner, we could lock in some great gains as this thing rallies back to the highs if it chooses to do so. That's basically my philosophy there on markets, is allow those giant trends to come every once in a while and to ride them as much as possible. The S&P 500 took a pretty good haircut there last week, and this brings us to the question of the day. Is it going to break back down decisively for the next few weeks and make a move back to the 200 period? Back when this was happening, I was very convinced and also very wrong, and this is why, the predictions are dangerous. I was making the prediction that the price wanted to come back to tag this 200-day moving average, which I guess is not a stupid idea when it does look like the counter trend is pretty strong, but we never even tagged that 200-day moving average. So I was wrong back there about that. But the question is, will this time it come and tag that 200-period moving average? I suppose it is possible. For me, I am not a big fan of shorting the S&P 500 because of two main reasons. Number one, we are still in a dominant uptrend. And number two, historically, this thing trends up over time. And so looking for shorts, I guess, is possible, and people do make money on it, but it is very, very tricky compared to being a buyer. So for me, it is all about, until proven otherwise, until we are under that 200 moving average, I'm not going to be so arrogant that I was back here to think that it would just come down. I did actually make some money on the shorts, but I probably gave back some money on shorts later on the S&P 500. And I've had an incredible amount of success buying the S&P 500 at key pullbacks and riding with trailing stops. So again, my philosophy on this has changed a little bit. It's my first year or so trading this instrument. I've never traded the S&P itself. I've always traded individual stocks or individual currency pairs. So, but anyways, my big philosophy here, I guess, my big philosophy, as if I'm some sort of monk in the heavens. My idea here is basically look for pullbacks, look to jump in, keep that risk relatively small, and try and ride any sort of continued recovery that the U.S. economy may have. So what that means, there's a couple key levels that I like, such as this area here as a longer term swing trade. This definitely would be, possible for prices to pull back to, but I'm not going to try and short my way down to there. Instead, if price, and that's the big word, if price comes to my level here, then I'd be interested in potentially buying this with a stop underneath and trying to go long on the continuation. Until we see this sell trend here start to show signs of slowing up, I'm probably going to be a little bit cautious. I actually did take a really great trade in this green candle. It was like a one-day trade. And usually I don't day trade on purpose, but sometimes the way it works out is I got into this trade towards the lows of the day, which was awesome. And that's what I do every single time, I promise. I'm just kidding, I don't. But if the opportunity arises where you get some sort of a strong sort of bounce indication, I jumped into that price. I jumped into that pullback there, rode it for the day, trailed my stop, and then as it reversed, I got out for, I think it was like 3 or 4 R on the trade, which was really good and ended up being a day trade by mistake because I did not expect the market to rally this much after this dip, but it did for a day, and then it gave it all back and continued lower. So I'm going to be watching for more pullback zones on the lower time frames this week, and probably will trade this thing if it does continue to take a dip, but then show any sort of signs of reversal. That's all I've got for this week, guys. Thank you so much for being here. I appreciate you watching these Sunday specials. You guys are always so supportive of them. Thank you very much for being here. I hope you have a great week of trading. Hey, if you are not already a member of our trading community, you can sign up with us. There's a link down below in the description and a promo code to get $5 off. If you want to join our private trading community, our moderators and our in-person staff work really hard to make that the best place for traders. You get access to all sorts of stuff. You can see trades that I am personally taking and my analysis with them in real time, as well as some of our other analysts that we have hired from around the globe. You get access to our chat rooms. We have webinars with our coach down under. His name is Joe. He's in Australia, and he's fantastic and very, very helpful to a lot of our members. So check that out, guys. If you have any interest, link down below in the description. I hope you have a great trading week, and I hope you stay well. Thanks so much for watching.